Hello everyone, this is Julian Pineda, market analyst with StoneX, and as we are moving forward into the second half of the year, one of the main reasons that could affect the behavior of North American currencies is the potential shift in the monetary policy of the United States. Now the Federal Reserve, and unlike the other central banks, is considering a potential change from stable interest rates to a new rate hike environment in the United States, and this could start to bring a new demand for the US dollar. This environment could make it difficult for the Mexican peso and Canadian dollar to start gaining ground against the US dollar for the next couple of months. So, starting with Canada, the situation is becoming more challenging. No, the Bank of Canada continues to signal that it may keep its policy rate stable at 2.25%, which is the lowest rate in North America. And this is making harder for the Canadian dollar to recover strength as the Canadian denominated assets offer less relative appeal compared with the other currencies in the region. Because of this, we are seeing and we are started to see an important bullish move in this pair, which reflects the pressure against the Canadian dollar in the last couple of months. So if the Bank of Canada maintains this perspective throughout the year, this stable perspective, the Canadian dollar could struggle to recover significantly, especially as the chart is now starting to show new relevant highs. Now, the situation in Mexico is a little bit different. Mexico is still has the highest interest rates in the region, with rates above the 6% level. And this has helped the Mexican peso to hold up better against the US dollar. However, Mexico has not been able to adopt a more aggressive monetary policy stance, and that may reduce the appeal of holding pesos consistently against the US dollar. If this dynamic continues, while we have a Federal Reserve that becomes more supportive of the US dollar, the pair could remain in a more neutral phase. That is what we are seeing right now, and this is already starting to appear gradually on the weekly chart that become more and more relevant for the next couple of months. Another important factor to watch is the situation in the Middle East. The US dollar has shown sensitivity to updates around the conflict, as you can see in the chart, especially when uncertainty increases and investors look for safe haven assets. So in this scenario, a potential peace agreement or a clearer normalization of the situation could reduce the demand of the dollar as a safe haven currency. And over the time, this could limit the parts of the strength that the USD has gained from the expectations of higher interest rates. This is pretty much everything. Thanks everyone for watching.